Alright guys, welcome to the channel, and today we're talking about what do we invest in when nothing seems investable. So let's have a look here at a couple of things. So we first have here, let's take a look at the S&P 500. We can see here the S&P has been taking a dive, so to speak. Now I can't say that it's really severe. We're about just about 6% from the highs, so it's not severe, but depending on when you have invested, this could take you back to about 6 months ago, the pricing from 6 months ago. Now, if you know the stock markets, you know that's really nothing compared to other bear markets of the past. But at the same time, it's actually a fair drop in accordance to how the market has been going recently and lately. And when I say that, I actually mean like the last 15 years plus, which is to say small, quick dips and the recovery. A dip and the recovery. Have a look here at the S&P 500, and you'll see we've got the 200 week moving average. Not 200 day, but 200 week moving average. That is a very long average compared to the daily 200. This is like 7 times longer. It's much longer than the usual sort of like attention span that traders have on the market, which is maybe about 200 days or so, just about a year. Whereas when we're talking about 200 week moving averages, we can now talk about moving averages that encompass human psychology, really, and trends that are larger than just the occasional buy and sell or the occasional geopolitical event. And that is what can give us the confidence to invest after seeing the line going up through that period. So you can see that here, and it has been choppy. Now in hindsight, we can see that in the 2000 crash, a good, about 50% crash. 08 was kind of similar. Now, what I didn't really know in the past, when I was seeing 08, I was just too young, is that I realized that the S&P never really reached like breaking new highs, as you can see right here. It's not much higher than where it was in 2000. So I just recently that, and that makes more sense now, again looking back, that we had such a bull market for 15 years, let's say, somewhere between 10 and 15 years, depending on your point of reference, to where we've been going up and had these into where? Into the 200 week moving average. You're seeing it in 2016. I remember that time. I should have invested at that. I didn't have the foresight. Also didn't have a lot of money at that time, but didn't quite have the foresight. And again, we can see that happening in 2018. In fact, after 08, we had that happen as well here in 2011. I remember those cases. And here around 2020, of course, with COVID, big. Now, each bar is a week. So, essence is that while these drops seem severe, they're so sharp, and we've gone from 3,400, call it, to 2,200. So that's about a 30% dip in 1, 2, 3, 4, 5 weeks. So like just over a month, and that can be difficult. Because now you have your $100,000 investment, $10,000 investment that's lost $30,000 or $3,000, a third. And you're probably thinking, well, I've got these other things going on, I better just hold on to the cash that I have left. And what I've noticed is that almost at any time, from what I can remember anyways in history, in so many instruments, in the S&P, Bitcoin, and gold, silver, when you come to that time where people are capitulating, selling, they're kind of giving in to the trend, that's actually where you want to hit it. That's actually where you want to buy. That's where you'd want to put some extra money in. Now, two things. A, you gotta have that extra money, so maybe that's some extra income or just regular income that you can DCA at that point. In other words, don't give up. Continue to DCA. Or, if you had the foresight, this is very difficult, you possibly could have betted that, well, as you can see here, we've got areas where we are very far from the 200-day or 200-week moving average, like here, and that's kind of reminiscent of what we have now. And we started going down here, but if you would have realized, how high above the 200-week moving average we are, that may have encouraged you to take some profits at that time, and you could have told yourself, well, I'll buy it back whenever we get close to the 200-week moving average. I really feel like that's part of what Buffett is doing. He famously is much more in cash, at least from the news that I've heard recently, and it always seems a bit early until the stuff hits the fan and stocks start to go down, things start looking bad. And in a sense, that's what we have now, and maybe it's just starting, or maybe we'll catch a break. No one can tell, no one can say for sure. And there could be many rips up here in the meanwhile. So if we go up 3% or 5% next week, it doesn't mean much. We could easily go down back again, and we could meet that 200-week moving average. Now, as if you want to hear a target, although it's dangerous, you could look at maybe this mid to high 5,000s mark for us to meet, for the S&P 500 to kind of go down to, and that could be that could be a buying opportunity. Before I get to my main point, I just wanted to have a look here. This is the Nasdaq 100 map, the top 100 companies, and you can just see this is a daily move, so so take it with a grain of salt, but everything is down apart from some improvement now in semiconductors finally, but not all of them, as you can see. But we do have some improvement there, as well as in consumer defensive stocks, Costco, Walmart, you can see here. Healthcare is still down, that's still bad, but anything that has to do with technology is just down, down, down. Alright, so what am I doing? I was recently into oil, and I am now rolling back those bets for the last 3 days or so, 4 days. I've been taking profits. XOM, so ExxonMobil, Devon, DVN, also an oil company, and then also a couple of ETFs that are supposed to track oil. There, and it's a different story, but I messed up. I did not get the move as it showed in the oil price chart, unfortunately. I invested in the wrong ETF, but I still got a good, about 30% move, and that's been quite good. It's been offsetting some other investments. But anyhow, as to what you can do now is, I would say in 2026, a time where everyone is used to all these things working out magically and so easily, and newcomers to the market getting 20-25% in their first year, if not more. That's not normal. Not normal. The issue is we've just had that non-normal for such a long time. after 2020, you would have had that. You could have done that. And last April, when we went down a lot, you could have. If you just bought the S&P 500, you would have had a super nice jump from there. So that's where we are now. Take a look at 2001. Take a look at 2008 or 9 here, and you can see that in fact we did have a break of the 200-week moving average. I would say if we get that break of a 200-week average, then anything at the bottom here, anytime we get a spike down, that's a definite buy. So to play this, you would either need to continue to DCA, dollar cost average, as you get paid. Put in 20% of that into the market. And what you'll see in retrospect is once we recover, and we will recover, if you have the guts to be buying on those days where people are panicking and people are selling, you will be handsomely rewarded not that long from there. So let's say here in 08, let's say during this bloodbath, let's say you were the first to buy and you caught a falling knife. You bought it here at 9.11 and it still went down, almost 30% from there, almost 25% from there. So it is very difficult psychologically. You would have waited 3 months and stuff still went down, even though you thought you got it at such a good deal here, which was almost 50% off the high. But it really is about time in that sense, in that kind of a scenario. And we don't know, similar to how we don't know when a parabolic stock or oil, for example, we didn't know that it's going to go to 115. If you were in it since 50s or 60s, you could have sold it 80 and 70 and said, oh, that's running too hot, but then it didn't, and it continued to go up. So it's nice to be somewhat invested. At the same time, it's nice to, when things are going down, to either know that you at least have more cash to DCA, more paychecks coming in, more income coming in, to be able to get into here. And if you bought here, maybe you could buy when it's lower again. I know it seems almost crazy, and it's even harder to do it at that time, let alone just talk about it. But you can see if you did do that, if we look at a year from there, you're up at least 20% on everything. And in a year from there, you've done, you're already up 20% from those moves, even if you're at break even, compared to your original loss. Like I said, if you can invest more when it's down, that's even better. But basically, you would have been rewarded in such a way that really there was no better buying opportunity from there on to, I would say, forever. When was the last time we've been to 1,000 S&P? Well, not since 2010. 2012 at the most, there was a dip, but if you did keep investing, you're up, or at least you're at break even from before the crash. And from there, it's just more holding on, and that patience is what rewards good investors with those doubling, tripling, quadrupling of their assets years down the road. So what am I personally doing here? Now we've broken through the 13-week moving average, which is the blue line, and I have sold, like I said, most of my oil positions. I still have maybe about 20% left, 15 to 20%, and I'm going to be selling that as well, just because it's run up so quickly. I will get into it as well, but I think that it has run a little too hot, the whole oil sector, and we could have opportunities there. So what I'm doing now is I am focused on DCAing buying back the S&P 500 and also Bitcoin as things get bad. Now with Bitcoin, don't worry, I did take profits and now I'm simply buying back. See, the issue is if you don't buy back, then those sales will seem silly in the future when things recover. So you might think, well, do we not recover? Do we just have like a doomsday scenario for 20 years? Incredibly unlikely, just incredibly unlikely, especially for the US, which is a power on which the reserve, the dollar, is based in. So the S&P 500, I would expect after a crash to just continue moving up with their inflation, with their money printing, and so will Bitcoin and so will other assets. But many have topped or just have run a little too hot. Let's have a look at Bitcoin here just quickly. You can see we're at approaching 71,000. With Bitcoin, very interestingly, we're above the 200 week moving average. So in a sense, we've done that move that you may expect the S&P 500 to do. But anyhow, with Bitcoin, we are at that stage. Where we go from here is not guaranteed. We could go up, which I think will surprise investors. We could just continue going back to all-time high and never see this $70,000 pricing again. That is a possibility. We've gone down from 125, so we've got about a 50% cut at the very low here of 60,000. But there is a chance that we go down and we visit 50 or 40 or so. Now I do believe that with these assets, the S&P as well as Bitcoin, this money that's been poured into it, it's kind of locked in the system. As long as the S&P 500, as long as companies don't blow up out of nowhere, as long as Bitcoin's network doesn't blow up, this is how it's gonna go. Similar to the money supply, similar to the reason that your iPhone is now, $1,000 or maybe more, and used to be 500. Similar to that sense, the prices of a new iPhone aren't all of a sudden going to collapse because it's all built in that system, and that system has the money created and then locked into the system, locked into the asset. So with Bitcoin, S&P 500, be okay with having your cash on the side. Cash is a great position. It means, zero loss. You should probably have it in like a money market account, 2 or 3 or 4% if you can. Even 2 or 3 I think is totally fine. If you can do it in almost a risk-free manner. And from there, just watch for those opportunities. Don't you want to be that person that bought the S&P 500, that bought Bitcoin on the low? Well, you have that opportunity now, or we're beginning to get that opportunity. I'm sorry, we're about like 6% from the high on the S&P. But on Bitcoin, the opportunity is becoming more attractive. And the only thing to keep in mind is if you don't have a lot of income to put later into this, then don't just go all in. Go 50% in or a third in. Give yourself room to buy if we go lower. At the same time, realize that we might not go lower, and that's kind of okay too, right? If we go high, then you'll just have the regret of maybe not putting in more money, but you will not have the regret and then the consequent issue of wanting to just sell, just sell, and give up. So don't do that. Keep on DCAing. Leave some money on the side. Leave some powder on the side, as they say, and take advantage of these opportunities. Similar to when things are going vertical, like with Nvidia, people think that the party is, won't stop. and they don't know when to sell, and many don't. They're still in it, but it's important to sell, I think, when things are going only up, and it seems like that's the only direction that's allowable. That's a good time, and at the same time, it's good to buy when things are going down, and it looks like they're going to continue to go down, and it looks like it's going to zero. That's it for today, guys. Hope this was enjoyable. Leave a comment here, and let me know what questions you have, what assets are you into, and catch you later. Thanks for watching.